Russia has moved troops into Ukraine, and all-out war appears to be imminent between the two countries. This, of course, has had a major impact on markets across the world. The first impact we're likely to feel is in the price at the pumps, as oil has now spiked above $100 a barrel. Maudi Lentsoane is an economist at Lehumo Investments and joins me now. Good evening to you, and thank you so much for your time. When we look at just the supplier of energy that Russia is, there are concerns that no countries, particularly in the US, would be able to fully substitute gas that is exported from Russia.
Good evening, Katie, and good evening to your viewers. It's very unfortunate developments that are unfolding in that part of the world. Nobody expected, this. In fact, I think the world was moving in a very positive space where, we were just beginning to think we might be seeing the end of the COVID-19, and we were beginning to be very optimistic about, the global GDP, expecting some, positive performance. But I think this latest development is certainly going to derail that. It's going to put a damper on that positivity, and I think you've seen that reaction on the markets across the flow. It is all negative, and understandably so, because markets do not like uncertainty, and that uncertainty that's been created there is going to cause a lot of havoc. And of course, you're correct, because this was unplanned, unexpected. It becomes difficult, to prepare for it logistically, to be able to then make alternatives as to where you're going to then, get the oil from if we've got a full-on, war and that disruption happening in that part of the world.
Russia is not only the second largest producer of gas globally, but also the third largest producer of oil. Let's talk about what the implications are and what then the impact of these sanctions on Russia by the European Union and its allies is likely to have on the rest of the global market.
You're correct. I mean, Russia is quite significant. We've always talked about OPEC, members and OPEC plus, and you couldn't really talk about OPEC and the oil producers and not include, Russia, because they play such a significant role, and they've, moved in line with, the OPEC members. So they're quite significant. So if you're withdrawing some of that production from there, we're talking about, the market, which will certainly experience a massive disruption. And as a result, because of that shortage, we could see, and we are beginning to see the oil price quickly move, to around $100 a barrel. So that's quite negative for the global economy. You indicated the petrol price immediately, some of the areas where we'll begin to see an impact. In fact, the petrol price is where we'll begin to see an immediate impact. So we could see in the coming weeks or in the coming months, if this is prolonged, and I mean, there's a lot of if, and of course, if you include the sanctions as well, even though at this stage, I think we're still going through the numbers and we're beginning to understand what those sanctions mean. They haven't been communicated fully. We don't know which areas or which sectors are being sanctioned and how severe they are. So I think we'll study those in the coming days and begin to understand just the severity of what that will cause in terms of the supply disruption.
And when it comes to some of the multinational oil suppliers, what do you think the impact of their operations being brought to a halt in Russia is going to mean for the areas where they work elsewhere in the world?
It's certainly going to be very severe, Katie. You look at just in terms of what we're reading from the market performance today. You look at companies such as your BP, which has a lot of market share in Russia, down almost close to 5%. And this is now the second day in a row. That tells you just in terms of how bad, especially those that are operating in that area, of the operations in that space, how they're going to be impacted. There's a lot of fear around the globe. There's a lot of panic as well. So depending on how severe or how prolonged this this tensions last for, I think it could have a very devastating impact.
Of course, a part of the move then to impose sanctions is that particularly the Western world is hoping that this will deter Russia from escalating this conflict and return it back to a path of diplomacy. Now, in the absence of that, who is likely to benefit from things being the way that they are?
There's always losers, in a war. They are never, the winners. They don't win much. I mean, Russia might be looking to impose their power, by occupying, Ukraine. And I think we remember in the past couple of years they've done the same when they pushed in Ukraine. And of course, when you look back and you realize in terms of the losses that we incurred after that, in terms of the disruption it's had on the global economy, far outweighs any potential benefits that they might be looking at. And those benefits are very selfish, only centered around what Russia has to gain, and very minimal to do with the benefits of the entire globe.
Again, when we take a look at the markets, we see that commodities, particularly gold, has made some significant gains today.
Yes, so naturally gold will perform very well in times like these ones. There's a lot of uncertainty. It's a hedge against inflation. It's a metal that obviously, is regarded as a safe haven. A lot of investors would rather put their money in gold, as it does not, of course, have that much of the volatility. So there's a lot of movement in that sector. There's also a lot of movement in the U.S. currency, which is the currency, the reserve currency of the world. So it is a safe haven. You are seeing also the Japanese yen also performing very well. Those are the safe haven currencies as well as gold. I think investors are seeking safety at the moment.
Let's talk about what South Africans then can reasonably expect. I know much of it will depend on how the situation with regard to this invasion unfolds. But for the next week or so, if we're able to make predictions that far, what advice would you have for South Africans?
I think it's, whether the war is prolonged or not, it's going to get tough for South Africans. Just looking from an inflationary perspective, I mean, we had the CPI already, registering a 5 point, in the upper band, closer to the upper band, and already we've had interest rates hikes over the past previous meetings. So we are certainly going to see petrol price hikes, if the oil price continues in this trajectory. And of course, you've also got the rand, which is weakening. So it's a double whammy. It's a double blow for the South African economy, and I think we can prepare for the difficult times ahead.
Just when we thought we were done with the difficult times, Maudi Lentsoane, let me thank you so much for your time. He's an economist at Lehumo Investments.